SoFi lowering my fair value estimate to $3.50 per share. These guys got to be out of their goddamn mind. Ladies and gentlemen, it is Saturday. We have a big catalyst coming up this week that you need to be fully prepared for, because it has a lot of direct implications to SoFi stock and what the Fed is going to do. That's why I like to bring you guys all of these catalysts. We are going to go over a little bit of breaking news, I guess call it that, out of Russia and Ukraine, some steps that the UK is taking as well as the US, which could trigger a response from Russia, and you could see that come back to light and really start to affect the markets a little bit more in this upcoming week. All in all, I think SoFi stock here and right now is definitely a big buy. Whether SoFi stock gets bought out or whether they don't, I think it's going to be a big deal for my personal portfolio, for a lot of people's portfolios that are down on SoFi, to be taking this opportunity to load up on SoFi stock for the cheap. Now, keep in mind, none of this is financial advice. I am not your financial advisor. I don't know your financial situation. Always have a diversified portfolio. You guys know the spiel there. It's not financial advice, just practical things to do as an investor. Now, let's get into all of this key information. The only thing that I ask is you hit the like button, subscribe to the channel, and source your comments or questions or concerns down below in the comment section. Thank you guys for watching, and let's get to it. All right, so the big catalyst coming this week is going to be the CPI report. That comes out on Tuesday, and really what people are going to pay attention to is obviously the core CPI month over month change for March. It's expected to come in at about 0.5%. That would be 6% inflation for 2022. If it comes in 1/10 higher, that's going to mean 6.6% averaged out inflation. If it comes in at 0.7%, that's going to mean over 7% inflation for the full year, and that's going to have a direct effect on a lot of high growth stocks, including SoFi, because it's going to give the Fed more fuel or more of a reason to continue to hike up the interest rates, as well as possibly reduce their balance sheet even at a faster speed than what the minutes just told us, at about 95 billion per month. So that's going to be very important to pay attention to. And you also do have the big banks that start reporting this week as well, and that's going to be very important, because as investors start to kind of think about a recession this year and certainly for next year, if the banks are saying, hey, people are not getting as many loans, you're not seeing a lot of lending activity, savings are going down, you're seeing people more so living paycheck to paycheck in a higher magnitude, you're going to get a lot of different data points. Those are only a couple to name, just a few. Then you're going to see the markets, definitely have a bad reaction to that. Or the opposite. If you see lending is still strong, things are looking pretty good, the markets are going to react very favorably to that. But it's really a win-win for people that are in growth stocks for the mid and the long term, especially. Once you do see growth fears or growth slowing down, you see those fears come into the markets, you tend to see growth stocks outperform, because growth stocks, they're growing. They're 10, well, not even 10%, but like 20, 30, 40, 50, 100% growth per year. If the economy is not growing, then a lot of investors do flock to those growth stocks. So it could be very well for SoFi and, a lot of our portfolios in more high growth stocks. But SoFi will definitely either get a big boost or take another hit off of this CPI report. Now, there is those rumors about a potential buyout, and I do think SoFi stock is a good buyout target. I don't necessarily want that to happen, but if it does happen, you're going to be looking at $15 to $20 per share. No doubt about that. I don't even think anyone would bother putting in a bid under $15 per share. So we'll see exactly what happens with that. That would bring me to about break even. So, I wouldn't personally want that. I'm down a lot in SoFi, but even at $15, that's pretty much my break even price. My average cost of $14.38 per share. So I wouldn't necessarily like that, and I want to take this opportunity to continue to load up and buy the dip. But like I said in the last video, if a buyout is announced or somebody puts in a bid for SoFi, and it's, $15, $20, whatever the number is, you're going to see a very violent move in the share price of SoFi to the upside, and that's something that is definitely tradable. But that's really it as far as catalyst for this week. The bank earnings, CPI, those are going to be the most important things. Friday, the markets are closed, so keep that in mind. You also do get a lot of data out of the UK for their PPI output, their CPI. We do get PPI as well, and that is going to be on, I believe, Wednesday. We do get PPI. So that's both of those important. Bank earnings, very, very important. That's really it. We do have an OPEC meeting as well. I believe that is on Monday, and that will affect the markets as far as the oil trade, the commodity trade that is here. You have some Fed speakers also, but the main things are going to be what we already went over. So a really, really jam-packed week for only a 4-day trading week. Now, the federal funds rate is still pricing in 5 to 6 50 basis point rate hikes back to back to back. So throughout the whole year, the federal funds rate is projected right now to be in between 3% and 3.5% by the end of the year. So if we finally do see inflation start to tick down, maybe not on this report, maybe on the next report, that's where you're going to get the markets really getting some steam to the upside. That's going to be very, very important. You know, when inflation does tick down, that's going to be a huge sigh of relief. So be very vigilant of that. I know you guys obviously are. It does affect SOFI stock a lot, and I expect this week to be no different. Now, as far as the escalatory situation that is coming out of Ukraine, you could see right here, the UK said it will be sending 120 armored vehicles plus new anti-ship missiles to support Ukraine's armed forces. Announcement made after talks in Kyiv between Boris Johnson and Zelensky. And then the U.S. Pentagon just said the U.S. is going to expand and recalibrate the intelligence information it is sharing with Ukraine as the scope of the Russian invasion is shifting. So we'll see if Russia actually does have a direct comment to this, if they start to threaten nukes again, or whatever response they get from or give from this is going to be important. 2 weeks ago, all the markets cared about was Russia and Ukraine. You know, every time nukes were mentioned, the markets did not react very favorably to that. Now you see another big step in, escalatory behaviors by the West. You probably will see Putin say something else about possibly using nukes or something along those lines. I don't want to be a political fortune teller here, but it will definitely affect the markets. If you get the markets freaked out because the Fed and Russia and Ukraine again, it's going to make for a very, very choppy market. So very important to stay up to date with this information. I'd like to bring it to you guys because not everybody pays attention to this, and I only bring information to you guys that will affect your investments, and I think this is definitely one of those things that will affect your investments. But nonetheless, that's really it as far as catalysts and the news that you guys need to know. Like we already went over as well, people, even the higher end earners, CNBC just did a survey, they are starting to cut back on leisure activities like going to malls, going to vacations, going out to eat, things like that. So you already got that kind of negative sentiment as far as consumer spending that is in the markets from last week's report. And that's why the bank earnings are also going to be so very important. Now let's specifically talk about SOFI stock and where we currently sit. So we're looking at 17.47% short interest up free float, 125.86 million shares that are sold short, cost of bar max of 3.54%, and the utilization of 100%. You're also seeing the days to cover at 2.81. Now, if SOFI stock does get a bid or just an announcement that somebody is looking to put a bid out for SOFI stock, you're probably going to see some shorts cover. I don't know if that would cause a short squeeze. I don't know. Probably not a huge one, but it would cause us to probably make that break of $10 where we have really lately been getting rejected off of. So that's going to be important. Something I'm paying attention to. You know, the insiders here, they were buying the stock heavy just in the last 2 months or so, with about $2.36 million worth right in this dip. Maybe it's because they know a buyout is coming and they want to, take advantage of that, or whatever the case is, before, a buyout did come out. You get less eyeballs watching you as far as the SEC if you bought stock way before a buyout or a bid is put on your stock. So that's what I would imagine this is for. If not, they're just very confident in the stock, which is kind of what I lean to. I hope it doesn't get bought out, but it looks like a prime candidate to get bought out nonetheless. So that's basically that as far as the option activity. On Friday, You've seen positive order value of 94% on a day SoFi dropped 2.5%. I think that's pretty damn big. 20 orders totaling $3.8 million. So it's looking very, very bullish in that regard. Hedge funds, they have more information than we do. And if they are bullish on the stock, then that's something, I want to pay attention to. And that's why I like to bring you guys the option flow sentiment from institutional investors. Now, the max pain for next week, let's go ahead and pull this up. Max pain sitting at, it was $9, and that's, kind of, where did we close, actually? SoFi stock, we closed at like 7 something, didn't we? Yeah, $7.87 per share. This is a beautiful time to buy the dip. But nonetheless, the max pain for this upcoming Friday is $10 per share. We'll see exactly what happens with that. The stock has obviously fallen a lot, and it looks primed for a bounce and a move to the upside. So the stock's currently sitting at, like I said, $7.87 per share, up 5 cents in after hours. So what that brings us to $7.92 per share, still at a very attractive valuation. Now, even more so than it has ever been in history. Sure, they guided down a little bit, but does that really matter in the grand scope of things? Not at all. SoFi is challenging the big banks, and they just got their bank charter, and I think everybody has already forgotten about that. That was a big step in the right direction. So something I am personally very bullish about. If we do get that bid, I would expect the stock to blow right up past $10 per share. If we don't, I mean, we were up 0.64% in after hours. I would expect a move, back to the upside. So that's basically that. The RSI is approaching severe oversold levels, and the MACD just went bearish. So pretty interesting, the divergence you're seeing there. It was kind of showing that SoFi was holding a lot of strength, trying to test and break above $10 per share, but that ultimately did not happen. Now, I briefly want to talk about why the price targets on SoFi from banks are so low. And if you do pull up this, not right there, not that one. If you do pull up this article that I was actually just taking a look at, this one, there's an opportunity brewing in SoFi stock, says analyst. Very, very good, right? You guys should definitely check this out. I'll leave this down below in the description of this video. But if you go to this website right here and click on this, SoFi stock forecast and price targets, you could see that, well, I gotta upgrade to it if I really want to look, but the firms that have the lowest price targets on SoFi stock, like $10 per share, these are the large banks. Why do you think the large banks have so many bad price targets on SoFi stock? Well, because they are challenging SoFi. They're challenging the big banks. SoFi is their direct competition. So, of course, they want to keep this stock down. They want it to be acquired by somebody else, right? But other guys, KBW, $18 price target. Rosenblatt Securities, $22 price target, right? Goldman Sachs doesn't even have a price target on them. They just have a hold. Like, give us a break, right? I believe it's JP Morgan, Goldman Sachs. They have the $10 price targets on SoFi. And for good reason in their regards. They don't want SoFi to get more attention or their share price to go up so they can have more capital to fight the banks and change the banking industry. That's another big reason I am very bullish on SoFi stock. Analysts tend to be wrong a lot more than they are right. And certainly on SoFi stock, it looks like it. Look, the sentiment for SoFi is actually just down and down and down right now. Now you have 7 buy signals or buy ratings, and you have 6 hold ratings. Even back here, you had 4 buy ratings and 1 hold rating. Back here, when you only had a couple analysts covering it, 2 buys, right? A lot more attention, and now you're seeing a lot more holds that are starting to come in. Average price target around $15 per share. I personally think SoFi stock could even 10x in price here in the next couple of years if they do continue on this growth trajectory. So pretty interesting right there. That's really it. Even this guy, look at that, 60% accurate. 109 out of 181 of his ratings were successful, and look at how many stars he has. 60%, 15% average return. Not bad at all. and he has an $18 price target on SOFI stock. Obviously, the banks have it wrong in this certain scenario. So that is pretty much going to be all for this video. Thank you guys for watching. Hit the like button. Subscribe to the channel if you guys are new here. You want to stick around a while and get up to date on this information. Every time something happens that will affect SOFI stock, I make sure to bring that to your guys' attention. So also, I am very curious. Let me know what you guys think about a potential buyout. Would you guys like that? Would that be a good thing? Would that be a bad thing in your personal opinion? What is your price target on SOFI stock if it were to get bought out? Where do you think the stock will be if it doesn't get bought out? Let me know that information down below in the comment section. Thank you for watching. Enjoy your weekend, and I will see you in the next one.